Hey guys, Ewan here. Just want to give you guys a bit of a mini lesson just before I head off, and I just wanted to make sure that you guys really understood this point. Now, the fact that I've got a load of golden rings drawn on my chart is just an example of where supply and demand actually falls. So you can see over here where my cursor is on the left hand side how quickly price moved out of this area here. See that huge burst? This gap in as well, this indicates its strength up. Now it halted around the area of supply. Okay, so this is where buyers have got into the market and now they're releasing their profits here. The first sign that you guys should ideally watch out for or look out for is an engulfing bar. I've taught this to you guys many times, but for those of you who don't know what an engulfing bar is, I'm just going to draw one out for you quickly in a kind of usual green and red candlestick fashion. So look, picture this. This will be a red bar, right? This is a typical red bar. This is what everybody normally sees in the chart. I've got purple and white for my viewing preference. So look, red bar, okay? Now, I want to draw a green bar, so look at this. Let's get green. And this will be the up bar. Hope this is making sense to you guys. Alright. Next bar, which will be a red bar. Here. Okay. Now, compare this illustration to this, what's actually happened on the chart. The fact that price has gone up, you can see green bar gone up, and it's halted. This is telling you that, okay, well, if it's halted, that means there's likely to be a selling frenzy happening or about to happen. That's normally an indication of an engulfing bar. An engulfing bar normally is about 60% or more of the previous bars being wiped out. So look, red bar is completely dwarfs this green bar in size, and obviously with its consistency in its way down. The fact that we've got this big purple bar engulfing the price or buying action on the left hand side of it is an indication to tell you that price is likely to head down. With a move like that, what a trader should do is make sure that he has a stop loss above the high, entry on the break. Maybe I should make that color a little bit different so you guys can see it. Okay, so this will be entry. I'm going to write this down as well so you guys, and make sure you do take screenshots if you can. I am going to make this a quick lesson. It's not going to go on forever as some of my usual training does. So this will be a stop loss, and this will be your sell entry. Now as price rotates down, where did demand actually start for this rally? Where did the demand area, where is demand, right? That's the question you must ask yourself. Well, you can say it's down here, which is true because there's a demand zone down here. Let me just get another rectangle. So there's one here, but the one that we're looking for, how did this gap even happen? All right, that's a strong surge of buyers there. That's right, it started and originated from here. So when you get price, or when you have price rotating down now, they're crashing through the 20 SMA, which we use as support. It crashes through this area here, which it actually used as support. And then it finally broke through again till it gets to a point where demand was met. Now that demand is strong. First touch into the zone is normally the strongest. Hence why we've got that push away. Can you see that slightly trickle as it moves its way up? And obviously we've got another halting period. Now I'm going to get rid of some of the illustrations so you guys can see what I'm talking about. And then let me get this as well. Okay, so we've got a push up, push down. Demand is still met down at this level here at this kind of 87.3 or 87.28, I believe I can see at this zone here. So we're going to continually get a push and another push and another push until eventually it breaks through and goes back down to where demand was actually met prior. So look, push down, back up to this zone here, chance to sell, your stop loss goes above the high, sell this market down again. Okay, you don't really have to wait for, at this point here, when you're trading between these two zones now, you don't have to really wait for price action to confirm what you're doing. You just normally need to know where supply and demand is actually being met. Is it a fresh zone? If so, yes, which is here. It ticks the boxes. Ticks the box. You can normally, or what normally happens, is that a selling frenzy will actually take place. And this actually took place based on, I believe, you know, the tension between Iran and the US at the moment, and a lot of kind of other kind of fundamental or macro data that's in the market. But I'd say to you as well, just pay attention to this simple supply and demand. Okay, someone had to have been willing to be selling here for this market to go down. There has to be a willing buyer here for the market to go up. As long as you remember those key concepts, you can do things like this all the time. Okay, so remembering, okay, let's retrace. Push up, supply zone, stop loss above the high, wait for the engulfing bar to happen, short the break, all the way down into the zone of where demand was last met. Demand pushed prices back up, didn't make it back up this area. That's fine. Push back down, demand was met, another opportunity, put your stop loss just beneath the low and buy the market back up. You could have come out here if you wanted to choose to do so, but you can see the market continued to rally up. As it rallied up, it was waiting for a period for the market to flick away and fall. That break happened around this area here, you can see. And what I do with my traders is I tell them to kind of look at the last bars that were in the area, or look at the kind of bars that are in a zone or consolidate. If price is consolidating, the only thing that you need to pay attention to is green, or in this case purple versus white. How much purple bars do you see versus white? If there's more big purple bars than there is white, you're likely to get a short out of this area. And that's, lo and behold, that's what's happened. Stop loss goes above the high, short. You could have taken your profits here if you wanted to, but the original demand, which was actually down here, okay, could have been taken too. Stop loss again beneath the low, buy this market back up. Engulfing candle actually confirms that this demand is actually very strong. Especially with the Nasdaq US Tech making new highs pretty much every day for the past 2 weeks or so. So look, push up. You could have taken your profits here if you chose to do so. Why? Because price halted here. But look, you've got a lovely engulfing bar again, engulfing price action to the left hand side of it, pushing prices or forcing prices up. So guys, this is Ewan Frost. I hope you've enjoyed this. Any questions, feel free to let me know. Other than that, contact details will be found in the link below, where you'll be able to reach and find me. I hope you've enjoyed this, and I'll speak to you guys soon. Take care.